Good afternoon. This is Mark Bruno. I'm the editor-in-chief of the Cannata Report, and we're excited today to be here with some executive leadership team members from GreatAmerica Financial Services.
Good to be with you. I'm Leighton Smith. I'm our Chief Strategy Officer. I was fortunate to join GreatAmerica about 2 years ago. In my work here, I'm responsible for the future growth and direction of the company.
Brian Biella. I'm the Chief Revenue Officer at GreatAmerica. I've been at GreatAmerica just over 15 years and responsible for all the business units and obviously revenue generation for the organization.
I'm Mitch Leahy. I've been with GreatAmerica going on 18 years now, and my role is General Manager of the Office Equipment Group.
And hello, Martin Golovich, CEO and one of the owners and second generation at GreatAmerica.
GreatAmerica made an announcement last July that it has plans to acquire a bank. I think it's called Heritage Bank. I realize that this is still in legal and regulatory approval process, but can somebody give us maybe an update on the process and maybe explain the strategy or the rationale behind why GreatAmerica is interested in operating a bank?
Sure, Mark. I'll take the answer for the first part, and I'll trust my cohorts here to pick up some of the pieces. So to give an update there, you're absolutely right. There's a lot of regulatory compliance and legal requirements that is not all together yet. But on December 15th, we did receive from the OCC, who is our primary regulator, our conditional approval. Those conditions were exactly what we had expected and discussed with them. Since that, just a few weeks ago, in early February, we have filed with the Federal Reserve, which is the second part of the process. Generally, we expect to hear back from them sometime in early April, and we're expecting hopefully similar news there. You never know what they might come up with, but we're pretty excited that somewhere in that April timeframe that it'll be a go live for, call it GreatAmerica Bank going forward.
Yeah, and Mark, I can speak a little bit to the rationale or the strategy behind the bank. I think it's important to note, this is GreatAmerica acquiring a bank, right? Versus when we're a family-owned independent finance company acquiring a bank versus a bank, acquiring an equipment finance and leasing company and rolling them into the bank. And that's an important distinction. And it's really driven off of a few key strategies. The first is, we look at it as a diversification strategy for our funding. As a national bank, we will be able to access deposits, brokered deposits and CDs, so that which adds power to our already, I'd say, powerful strategies of our bond market issuance that we do once or twice a year. So that's a key strategy for us. I would say federal preemption is another. So with all the state regulatory lending laws that continue to grow and rise, a lot of them bleeding from consumer lending to commercial lending, it becomes administratively challenging. Not that the laws in and of themselves are the issue, but trying to keep all of that straight by state is. So this allows us to just be under federal law instead of state laws when it comes to our lending. And then last is, it does provide us with the opportunity to expand our product lines, right? So if you think about traditional banking products, that could be lines of credit, revolvers, depository relationships that we can provide to our dealers and to our dealers' customers. So that'd be the three primary reasons why we're pursuing this strategy.
Great. Thank you for that update and that explanation. Moving along, I guess I'd like to just talk about last year real quick, and in terms of the challenges that the equipment resellers faced with the tariff situation, and maybe ask, in terms of GreatAmerica, what you guys feel like you've done and what you're going to continue to do to help alleviate some of those challenges for your dealer partners.
Mark, the conversation around just margin compression in general for our customers has been one that's been a couple years now. As far as the conversation goes, and tariffs this last year certainly had a big contributing factor as part of that discussion. So all of our customers are looking for ways to recoup costs. They're looking for ways to diversify revenues and also then create efficiencies in their business and streamline some things as well. That for us is compounded with, I'd say, some of the challenges that our customers have seen just in even upgrades, which is a large portion of revenue for our customers each and every year, and balancing upgrading contracts that, in those later years of contracts are typically the more profitable years for those. And the potential to cannibalize some of that revenue moving forward has also been part of that conversation, and cannibalizing margin as well. So a couple of things that we've done, particularly in the last probably 24 to 36 months is, first and foremost, I'd say trying to accommodate existing needs and requests for our customers who have increased costs throughout the life of existing contracts. So trying to help them recoup some of those costs. We've been able to leverage our technology integrations on the ERP side of the world. And when our customers are able to pass along those costs to their end users, we're able to do that in a really efficient way so their end user still gets a single invoice solution. And we're able to leverage a lot of the back end processes we have built in place with our customers today. I'd say the second part that we've done there is trying to be forward thinking then out into the future around redrafting some lease and service contracts in partnership with our customers, making sure that they're protected against maybe some of those things that go beyond or above the traditional costs that escalations are built into those contracts to suffice for. I would say we've also looked at different ways then on the back end of the transaction from an upgrade opportunity. As more of those conversations or contracts rather have gone into renewal, we've created ways that not only add visibility, but also try to incentivize both sales teams as well as end users to make a decision and move forward and create new revenue for our customers where they're wanting to focus. And at a minimum, we've created some opportunities for customers to at least lock in the short term some contracted revenue for the next 12 to say 24 months in the form of contract extensions. We always do targeted pricing promotions in partnership with our customers, in partnership with some of the OEMs, but those are kind of the easy things. The other areas I feel like we're really focused on long term. How do we help our customers protect against another scenario where things increase so dramatically in such a short order like they did in 2025?
Profitability, obviously, and business sustainability are two critical areas. In terms of product and service diversity, which is one strategy that a lot of people subscribe to, what has GreatAmerica done, and what do you foresee yourselves continuing to do to help dealerships achieve those two goals?
So we've seen the full broad spectrum of diversification topics and strategies from our customers over really the last 8 to 10 years. And that's everything from, managed IT, which I feel like people who are in that space now are really solidified there, and not as many people are getting into that. People have moved into workflow and document management. They have moved into voice over IP, and even down the path of audiovisual, physical security, and some requests we're getting more recently for some of the water cooler activity that's out there. Those have afforded us an opportunity to expand, I'd say, the same type of service we think about offering our customers. So not only providing them the opportunity to go and lead with a payment first strategy as they diversify and sell those products, but also be able to make margin on those things and fit that into their sales process. The second piece is we continue to invest in some of the technology integrations that we have, really expanding our suite of products and partners with those companies who maybe have traditionally served more of the MSP space or in some of the physical security or audiovisual channels that I mentioned. So we want to continue to be integrated in the quoting, proposal, and back-end processes. And those are investments we've continued to make to help our customers transition and work efficiently across our interactions with GreatAmerica and our dealers moving forward, much like we do on the print side. We continue to hear yet that there's a really large opportunity in terms of A4 devices out there in the channel on the traditional print side that are still up for grabs in terms of service revenue. And so those are things that we feel like are right down the middle of the plate for us and what we offer today. So we're excited to continue to work with our customers, maybe who aren't as focused on diversification, but are more focused on really trying to get better in some of the areas that they're selling into today.
We hear the term small ticket leasing kind of thrown around. What is GreatAmerica's approach? I guess, first of all, what is it, if you could define it, and then tell us what your approach is, your strategy in terms of small ticket leasing.
Yeah, I think the definition of small ticket leasing will certainly vary, Mark, based on who you ask, right? Generally, it would probably be classified as, a platform focused on transactions $500,000 or lower, or maybe even $250,000 and under. which certainly captures a lot of what we do in the office equipment space. When you think about a small ticket, I'll say platform, right? We're focused on expanding and building on what we've already built today, right? That is a platform that should be built on convenience, ease of doing business, and speed predominantly. It needs to be integrated into our dealers, into our customers, in their business, in their tech, and their systems, and that point of sale. That just collaborates with speed and ease of business. And then lastly, it does need to provide some optionality and flexibility, right? So not all, one size does not fit all. So an example would be, we may have some dealers that do everything digitally with us, send in transactions via integration. They view their portfolio through our portal. They access their data with us electronically. Vice versa, we still have a large number of customers that want to call or email and talk to our people about their business and transactions. So we've built a team-based approach in our entire organization that we can execute really well there, right? And we provide a really consistent and excellent customer experience. So that's core to office equipment. If you think about more holistically, I mean, office equipment is our largest business unit. It is at the heart of and is the heartbeat of GreatAmerica. That will not change. But we are looking and will continue to diversify our small ticket platform into other industries and markets. And we've done that. We've done that over the years. We'll continue to do that. We want to leverage that platform into other industries. We also want to leverage the platform to offer more products and services to our dealers and our customers. So it's really about growth and expansion of the success we've had the past 33 years.